Welcome to Talking Tuesday. I am your host, Fancy Quant, and today we are going to talk about the thing that everybody's been asking about now for, I don't know, at least a year or two. And that is going to be what is happening with the banks here, Dimitri. You left banking, you swore them off, you were done, you were moving on, you are now in fintech. And you said there was a lot of issues going on in banking as an entire community here, a lot of failures. And then I went quiet for over a year now. So let's figure out what's really going on with the banking community. It's hard to exactly nail down what it is without getting too political. And so going back through and looking at this, a lot of these issues I think are stemming from, I don't want to say a cultural issue, but it's really a cultural issue. You have political manipulation within the banking system. It's bleeding down through the government. And so I sound like a crazy person when I start like this, but let's take a step back to understand why I was such a fan of DeFi originally. And then too many nonsensical people got involved in DeFi and have now turned it into this really odd, bros club of people not really understanding how markets or finance work. And now they've created this horrible, toxic DeFi structuring and piece here. And this all plays into the banks here, so give me a second. But you have to look back at how this all got structured. And came back to the original JP Morgan. So the man himself, not necessarily the banks. After the financial crash here in 1929, 1930s, and the markets came down and the Great Depression hit, there was all these runs on the bank. And so the question was, how do we fix the runs on the bank? Historically, JP Morgan came in and said, okay, we need to create a group of banks so that essentially if one bank has a run and other banks have liquidity, you can provide cash to those banks. So that was supposed to hedge that. And that's really how we have like FDIC. So you think about, you have a savings account, you have FDIC, and I think they guarantee now up to like $250,000 that they will, if you put this money in this bank and it's FDIC backed, the government will essentially guarantee you have that money. So that's kind of the underpinning of what's going on here, where, there's a tie where the banks themselves, it's not the system per se. Like people say, DeFi represents decentralizing the structure and centralized finance is the centralized structure. And it is, if you understand that the centralized structure is centralized because you have government, and government has their hand in the pockets of the banks. And so there's a little bit of control and manipulation from regulators. So even things like manipulating economic, interest rates, for example, saying, well, we're concerned about unemployment or we're concerned about inflation. And so we're going to, print money and we're going to do quantitative easing and we're going to make this adjustment here and there. And we're going to change the lending rate. So yes, big financial institutions can lend money from the federal government. There's overnight lending rates, which you can look up if you don't know about that. But essentially what happens is banks have to have a specific amount of liquidity on hand to cover all their positions. And if they come up short at the end of the night, they can do short-term borrowing through this lending window. Now you can just keep rolling this over, which is something else you can do here. But the reason I was more pro DeFi in the beginning, what was happening was because I was hoping people would start to step back and realize it's a really hard problem to solve in the sense that you want people to have trust in banks. And this is often what we see when we see underbanked populations, is that they just don't trust the banks. There seems to be all these extra fees. There's a lot of things that aren't clear. Banks don't seem to be treating everybody fairly. And often these things are just skewed because you don't understand banking, and it's a big convoluted mess as that is. And I think we're slowly getting to the point where we're getting more and more of the underbanked population onto banks. So yes, you can put your money in this financial institution. Many of these firms and banks have gotten rid of those ridiculous, minimum amounts. Like, you have to have $1,000 in your bank account. And if you don't, you have a fee of some sorts. So minimum balance fees, basically. And so anyways, the banking system is kind of intertwined together and it's weaved and everybody's interacting and there's a nice centralized system. And the advantage of the centralized system in itself, which is what I'm for, is that the fact that it's very efficient. So that's why centralization is good. Centralization now, when you start adding government into it, this is where we start to get a little fuzzy. And there starts to be things like bailouts in the 2007, 2008 financial crisis, where a lot of people don't realize we should let these firms go bankrupt. Well, it's the government letting its other governmental partners basically, so the government has a tie into the financial institutions to let them go bankrupt. And then also there's also this cascading effect. So I was in favor of letting many of these banks go bankrupt. But there is a cascading effect that it will, hurt and harm citizens who are using the banks who made none of these decisions, right? And it's really hard. Like, even if you ask me today, Dimitri, what is the safest bank to keep your money in? I don't really know, because all these different banks have different financial positions, and many of these aren't, made public information. And there's all kinds of other pieces that tie into this, and decision-making and management, and there's a lot to it. And so when you have to step back historically and look at this, banks are tied into government. They are, not the same. This isn't like China, where it is the Bank of China, which is literally controlled by the government. There has been freedom for the banks, and there has been meritocracy, which we're going to see is kind of the failing piece here in the banks currently, which is why I think the banking industry is kind of corroding and falling in on itself. And yet the people at the very top don't really care, because they're getting paid big money and they're playing a lot of these political games, while the banks themselves are becoming less and less profitable. The risk in these institutions is climbing further and further, and the amount of nonsensical regulations are being stacked higher and higher and higher on top of these banks. And part of my frustration and struggle with this is there are many people in these institutions, these banks, I think, that are going along with things because it seems, seems like a nice thing to do. I'm helping people out, and yeah, we need some more regulation and it will create more jobs. And so we'll just hire a bunch more people and we'll do all these other things. And at the end of the day, they have good intentions. Like, I know a lot of these people personally, they have good intentions, but I don't think they stop to think about the consequences of these intentions, or they have thought about it and they're not willing to stand up and say, this is complete nonsense. I do not stand for this and I will not do this. So let's dive in here to the meritocracy piece of this and how this is kind of going. There are multiple facets of this, but this is kind of stemming now, again, it's all intertwined. Government, banking, and universities are kind of all in this cahoot together, and this creates even more problems and more struggles. So one of the big pushes that we have seen, I'm trying to figure out where I want to start with this, is that we want equality and fairness, and we have deemed essentially, well, the government and specific parties within the government have deemed that we have inequality just because we have systemic racism. Okay? So I'll let you take it on your perspective if you agree with it or not agree with it. But the issue with this is that the banks themselves, so this is where I have an issue with the racial profiling of the banks, is that if we have racism in these firms, whether it's a bank or, a financial institution or, a retail store, if any firm in the country has racial hiring practices, there's some sort of racial discrimination going on, we should just nip that right in the bud. Like, who's doing the discrimination? And if whoever is doing that discrimination, they should be let go. So that removes the piece from the firm here. But instead, what the banks are doing now, which is why this gets real tricky with quant finance, is that they want to level it all so that essentially the complaint is there are too many Americans in banks, and specifically there are too many white males in banking. So therefore we are going to correct that by just not hiring white males. So you're like, okay, but they hire quite a few. They do. But this is what's been going on behind the scenes, and a lot of this is not secretive. It's, if you're an employee at a bank, you should notice these sort of programs because everybody gets invited to these bank-wide conferences, the bank-wide, not conferences, but bank-wide meetings, and they explain it to everybody. So one of the issues we have is that, so let me do quant finance here for a second for those of you that don't know. Quantitative finance in the United States is predominantly not white males. It is predominantly Asians, and 75+% of all quants are not American. And out of those, I mean, those are not American born. So these are not necessarily minorities. These are minorities who are not even from the United States. We are literally importing people from abroad. They're going through U.S. universities and education and training, and then the quantitative finance community is pulling them in, which is a whole issue in itself. But quantitative finance is not white male. It is not white. It is going to be a very diverse mix of people. And often I've worked with people from countries in Africa, South America, Europe, and of course, a lot of Asians, both from India and China. Those are the two predominant countries that dominate quantitative finance here. And so one of the things the banks have been doing, at least a few of these banks I have noticed, both banks I have worked at and banks that are, marketing and doing all this branding around it, was that consultants essentially were brought in to fix the problem of inequality here. So being from a data background, what I'm trying to figure out is what is the true distribution of these different groups here? And you have to account for everybody, right? I'm so tired of people grouping there's like one group versus everybody, or it's like there's 3 groups or there's 5 groups. There are tons of different nationalities. There are tons of different races. So I like to break this down, data-wise as a quant here. What is the true distribution? And the problem is nobody can tell me that. And the reason nobody can tell me that is because no one wants to do the actual math. Because when you start to break this down, like quantitative finance here, being an American, there aren't a lot of Americans that go into STEM fields that want to go into quantitative finance. So a lot of Americans, again, predominantly white males, want to go into engineering and mathematics. And it's just a personal interest thing. So again, you can get onto the debate. Is it biological? Is there some sort of systemic change in the education system that has created this bias of people choosing to go into different degrees? I'll leave that up to you to think about. But the issue is then they all go into engineering, and then you know what they want to do when they're done with their degrees? They want to be engineers. They don't want to go into quantitative finance. They want to be engineers. And a lot of math students want to be mathematicians. Not surprising, people that go to get a very specific degree go to actually work in that field. Quantitative finance is so new though, and there has been no undergrad programs way back when I started. I don't think there were any. And now they're starting to pop up left and right, and there's tons of master's programs. They're starting to get more people involved. And now I'm working with universities who are saying, Dimitri, we can't get the Americans to apply. Like, who do you target? Where do you go to find these Americans? Like, you're the American that we know that is white male who is in this field, and we can't find any Americans who want to do quantitative finance. And so it's this really weird conundrum where the banks are complaining on one side that, we don't want any of you. Please don't come. White males, please go away. Even white females, please go away. We just want to have these minorities come in, which is fine. So you look at quantitative finance, and now we kind of have the opposite problem here where it's like, wait, we need to have more American citizens, but we don't want white males. We want minorities. But then again, we start to have these skews in the data. So we can't even get Americans as a general population to come and apply and get these degrees in education and training to be prepared to work in quantitative finance. And now you're going to nail this down even more to very specific minorities within America. So this gets very, very weird and very controversial in the fact that on one hand, you're trying to push. So trying to think about this here for a second for a lot of you. As a company that hires, you are pushed to hire those who are American citizens over those who are international. I get that. I understand that. If we have good talent here, just hire the talent here. I'm all for that. But the issue now is that you kind of end up in this weird bind where it's like, we're supposed to be hiring Americans, but there are no Americans to fill these jobs. And so we're supposed to get minorities, but there's even less minorities to do this. So essentially, we just can't find anybody to do the work now. So what some of this outcome has been is now we try to find people who are not really qualified, but they fit some sort of token, and I need a token on this team. And so tokens are being added into teams purely because they're tokens, not because they are some sort of rare outlier. It's not like when I graduated, it wasn't like people are like, oh man, an American who is a quant, like there were not firms, tripping over themselves trying to get me. It was basically like, you're an American, you probably don't know what you're doing. This seems odd, like you don't fit the role here. And so what the banks are doing now on their actual plans and procedures and everything that's actually being published is that now banks are going out. And we had a consulting firm that came in, and they came in and said, you know what, we think that we are discriminating. And by we mean we don't know who, but somebody is discriminating. And so what we're going to do to solve this problem is that we are going to rank you based on your race. And now based on the rankings, and they actually had rankings and told all the employees the actual rankings of these races. And I won't talk about them here, but they ranked them out and said, we are going to start this program, and we're going to take people that are of this race based on your race, on the ranking of your race. Whoever's in bucket 1 will get the first choice at the jobs, So if you want to move to another department, and this is whole bank wide, this is not just quant finance. if you are going to be wanting a job or you want a promotion or you want to do something different, so you want to move around the firm, something like that, you're going to get preference hands down because you're race number one. And we're going to do this and we're going to push race number one and see if we can get as many of them as possible into all these different positions, management positions specifically, because it looks a lot better with regulators. And it makes us feel good that we are doing something about this racism internally. And so what ends up happening on this token is now all of a sudden you have numbers and you have ranked employees based on value, which has absolutely nothing to do with your ability to do a job. And this is where the meritocracy of this whole problem is falling apart. And this is why banks used to be this really amazing place to work. And you saw people that were in their 30s that were like, heads of departments and SVPs and senior managing directors and everything, because there used to be this really driven thing that if you did the time, you did the effort, you did the work, and you were really brilliant, you could go from zero all the way to the top very fast. Unfortunately, this is really not possible anymore. It is breaking down a lot, even since I've been in the industry for, 9 years now. From when I started to when I am currently in this position and left fintech a year ago, so that 8-year span there, a lot of that has deteriorated, and there is this ranking system now inside these firms. And when they brought in a company, they paid a company to come up with the ranking of these races, to rank the people, to give them promotions based off of your race. Like, this is just insanity. Like, I feel like I'm just making things up. And I talk to my colleagues who are, again, in quant finance and internationals, and they're like losing their minds. And I'm like, at least you're further up this rank than, the white males at the very, very dead last bottom here. And they're saying, yeah, but we're Chinese. We were second to last. Like, they're putting us in the very bottom because there's too many of us in banking now on top of it. So now we're not going to get promoted because of that. And I'm just like, I can't even believe it. Like, you put your head down and you ignore a lot of this nonsense. But career-wise, when it really starts impacting your trajectory, your growth, again, when I saw people that were doing the majority of the work on teams, it was like, an American and a Chinese, and yet they weren't getting promoted that long. And you'd see other people that were, they'd bring in people who are tokens who are just not working because they just didn't have the educational background. And that's one whole issue. The second issue on the banking piece is that the banks didn't want to train them because it was so much freaking work to train them, to bring them up to status. And so instead of saying, okay, we're going to bring in some people, let's try something new here, right? Let's try another program where you bring in people maybe from different backgrounds, which would be a better way to phrase this politically correct without offending people and being, overtly racist against everybody here. We could have actually brought people in and we could have had training programs to train these individuals to bring them up. And then you could have inadvertently, secretively try to, balance out the races based on your preferences. Now, again, going back to the original piece here, we still don't have the distribution. I don't even know what numbers they're targeting. So why are we maybe there is, maybe behind the doors, they have a quota number of how many they need in each department in tokens. I was never given any, information to that. I don't think they've even thought that through. I think it's just, politically, it sounds good if we are increasing diversity, especially in management. And to do that, we're going to rank everybody out and build a program to do that. So this was one issue. Another issue was I was contacted and people were wanting me to come to a specific firm to build a team of quants. Awesome. This sounds like an amazing job opportunity. And then the problem with this is that then I was being told, you need to go out, since you're in Texas, obviously, and hire a bunch of Latinos. So what we're going to do is our firm has a bunch of Asians in the, model development, model validation, quant space. As a bank as a whole too, we're a little low on Latinos. So we want you to build a team of Latinos, and you need to go to universities in Texas because that's where you're at. The rest of us, we are on the East Coast in the snobby, noses held high ridiculousness part of the United States. And so we're not going to hire these minorities, but we want you to create a team in Dallas, Texas, where there are more Latinos in general. And we want you to hire a team that is just Latino. Like, this isn't even them telling me you need to hire a team that is diverse. It's not saying you need to hire a team, that has more minorities. Like, that would even be more of a slant. Now it's like they're exactly targeting, I need someone that has this racial profile because we need diversity, not because we're missing a skill set within the team. That would be completely different. Like saying, Dimitri, we would love you to start a team here for this firm. And we would love you to go out and find someone who has an expertise in this, right? Just go find the best person. That's what we're trying to do here. But again, tying this into government now, because banks have financial support from the government in many ways, the government now has some control to push some of this agenda towards them. And unfortunately, a lot of the people I know that are in these situations that are even pushing a lot of this nonsense, I think they think in their mind, they're doing the right thing. Like, you're right. There are just so many people that are, they all look the same here. And of course, the people that are saying this, again, are not typically Americans. They're just people in other positions, other minority groups. And they're like, yeah, let's do this. Let's do this. And then I look at them and I go, okay, so how many have you hired that have not been Chinese or Indian in the quant field? Like, you're wanting me to do this for you, but you can't even find qualified people in these groups to do it. And now you're just skewing it to skew it. So academically, I have respect for a lot of these people on the quant side, like the technical rigor. But I think the problem is they just lost their rockers, or they're so politically biased that they just can't realize, like, we probably shouldn't just be discriminating against people just to discriminate against people. And this gets worse in the fact that when you have these sorts of rankings, like depending where your minority group sits, if you're a minority, you're going to be disadvantaged because your minority is ranked into a different number. You might be number 4, which seems great out of 7 or something, but you're not number 1, number 2, or number 3. And so when you go to apply for a job, even if you're the most qualified person, and even if you don't care about the race piece of it, you're still going to get dinged because of that piece. So this is some of the insanity that's going on. And this leads me into the next topic here, which is just the lack of qualifications of people in banking as a whole now, which has just been frustrating and struggling. The banks are so large. So trying to explain this to people in general, the banks are so large, they just need enough key employees who are qualified to keep the thing running. So every bank has really bright people somewhere in the bank. That's how they keep these things afloat. But banks are so set up with so many layers of employees, and they have so much capital to manage that, it's hard to make a bank fail largely unless the market does so for you. But if we have like a good economic condition and you have tons of employees, what ends up happening is, the good employees will work enough to cover the nonsense for the bad employees. And really, since there are so many employees, even if you had, 10 good employees and 200 bad employees, the 10 good employees are excellent employees here, which do exist in these banks. They are going to be able to carry the weight of all the other nonsense behind them. And as long as that nonsense behind them can just halfway do their job and bumble through life, banks are still semi-profitable and kind of churning forward. So the question then becomes for many people is, Dimitri, if there's such, intelligent people in these banks and they're not getting promoted through a meritocratic system, why are they staying? Well, it's comfortable. I mean, I just left. I've been in the banking industry for 8 years before I left. It was very comfortable. Like, I knew I was a top performer, so even when a crisis hit, I wouldn't be let go. It's almost like guaranteed job. The pay is comfortable as well because, I did my job well. Again, in quantitative finance specifically, it's hard to find people to actually do the work and do it well. And so you end up with this nice, comfortable bubble around you, where it's like, that even if political issues go south, as long as you keep your head down, you don't rock the boat too much, you might not necessarily get the promotions you deserve. You might not necessarily get pushed into the positions you want. But at the same token, for a lot of those in quantitative finance, we could jump into, hedge funds, but it's really risky at a hedge fund. It's really volatile at a hedge fund. You work a lot more hours at a hedge fund. Banking is just this nice, comfy life. Like, you can still do, like, for me, when I was there, I could do quantitative finance. I had the cushions and protections around me. There's a lot of nonsense and political BS going around. But for the most part, like, I could just shut up, sit back, show up, do my 9 to 5, 9 to 5:30, whatever, go home. No one's going to question it. Nothing's bad's going to happen. I'm carrying a team as well at that point. So if you're a top performer, yeah, it would be nice to make an extra 20, 30, 40, 50, 80% or something above what you're making. And it'd be nice to have a title, but there's this really risky piece that it might not all pan out. And so now I'm in fintech, and fintech is a startup industry. And I'm at a firm who's been around for, I think about 5 years now. And so they're semi-stable. Like for a fintech firm, they're pretty stable. So I was comfortable making that jump. But for a lot of people in banking, there's not an incentive to jump and to kind of leave and move away from that. And now that goes into the lack of qualifications here, which I wanted to talk about last year. You start looking at chief risk officers at the world's largest banks. So look at them. Think about in your mind what you think a chief risk officer should have, right? You would probably think they would need to know models, because when you look at the modeling space, and I see this probably from a little higher view than many people, but you have enterprise risk management, which is like, we're just tracking and managing risks and issues across an entire firm, and most of these are not quantitative. But what drives your business as a bank, so whether you're doing loans, for example, mortgages, auto, credit card, personal loans, or you're going to be doing things such as managing money like wealth management for clients, at the end of the day here, you still have models driving the vast majority of this. Now, there are areas and pockets of banks. For example, if you're a bank doing corporate, so corporate to corporate, so business, I guess, banking to corporate loans, and you don't do a lot of them, and they're really niche and they're really unique, you don't have a lot of data. So you're not going to be really doing models on that front. But for things that are retail focused, things that are market driven, there are models on top of models on top of models. I know a lot of the big banks can have over 1,000 models. Talking big global banks here. And so these quants and mathematicians are actually driving this forward. And the way it works is, you have, explain this a little bit. Model development typically reports into the financial side. So those that are making profits, for profit. So it goes in from like a development team who goes into like head of development, and they report into often like the CFO, and then the CFO reports in, of course, to the CEO. But validation teams in banking institutions go such that you have validation, which is really part of a team called model risk management. They're called second line of defense because they do all of the overview and review of the first line of defense, who is the people building the models. But validation and governance are two teams. Governance does like inventory tracking and all that. Validation does the actual math work and stats work. It all reports into the head of model risk management. And then model risk management reports into the chief risk officer, and the chief risk officer reports into the board of directors. They do not report into the CEO. So when they do these diagram, hierarchy trees, there's usually a dotted line between the CEO and the CRO, in the sense that the CEO makes all the decisions for the firm. The CRO basically reports into him unofficially, but technically he reports into the board of directors, because if there are risks at the firm, you don't want people making poor decisions based purely off of profit. So that's why they have separated them out. This is part of SR 11.7, which is the letter that was written by the federal regulators, again, government here, to keep these two halves split and separate, which I agree with. I think this is actually a fairly good way to do this. But you start going through this and you start to think in your head, okay, the chief risk officer is managing enterprise risk management, which is a team that manages all the risks. And a lot of these are tracking, like, are people having policies in place and procedures? And are we monitoring all of our key KRIs, which are key risk indicators? And there's a lot of this boring stuff, which is fine, which is enterprise risk. And then you have the quant side, which is all the models and the math and the stats that are driving the business, decisioning, when to repossess vehicles, who to contact, how often to contact, how to price loans, how to price assets, products, investments, how to price your risk, for example, if you have any risk metrics around these. And so they're building all these models, all this pricing. Any financial engineering a bank will do will be done by a quant team who will actually engineer these products. And so all of this is occurring and happening at the banking level. So you would assume whoever is the chief risk officer would have to understand at least the modeling part decently well. Enterprise risk is pretty easy to figure out. Like, did you have a policy in place for this? Yes or no? Like, for example, data governance is one of these areas. Do you have a policy in place to restrict, personal identifiable information, which is called PII? Do you have a policy in place to prevent every employee from basically being able to pull up like social security numbers and addresses and all that? That is a regulation and a rule. And of course, anybody can kind of figure these things out because they're kind of easy to teach. There's things you learn on the job. So if you've worked in anywhere in the businessing realm, somewhat, you would kind of understand this and see this if you come through the risk side. Now, the problem is if you go and look at all the top chief risk officers at all the big global banks, almost none of them have a technical background of any sorts. So they have no idea how these models work. They have no idea how the risk actually works. And I've met with a handful of them. And when you start to explain things like an issue of, say we failed a model because there was, I don't know, there's a time series model, it was non-stationary, the model's not going to work in practice, and the out of time sample wasn't really out of time, it was out of sample. So it's a nuanced detail here. Anyways, the way the sampling was done is invalid, and so you can actually prove the model will fail within 3 months, and here's an example of this, and this is why. And then the development side says we don't really care because, we spent all this time building this model, and so, we get into these technical nuanced details and we're arguing and bickering. And it goes from validation and development up to the heads of validation and development, up to the chief risk officer, who then has to come in and step in and, make a final decision based on the risk. We are going to do X, Y, and Z. Unfortunately, most of them just don't understand modeling, math, stats, and I don't expect them to be able to code and program and do, all the nuanced nitty-gritty details. But the sad reality is most of them just don't do it. And where the meritocracy piece of this is actually failing is at one of the firms I noticed. So I worked with a lot of different banks and talked to a lot of people across the industry. We had basically a CEO at one of the firms let go. And then that resulted in a bunch of other issues, which resulted in the head of validation being let go because there were some issues there. And so then when they gutted out part of development, part of validation, the executives left, some reshuffling happened. What they ended up doing is then bringing in a guy who was a friend of someone. So the chief risk officer had a very specific nationality who is known for discriminating across firms. And unfortunately, this is somewhat of a cultural bias where they tend to only hire people like themselves. And so you actually do have racial bias here. So I talked about earlier trying to level the playing field, trying to find where you have racial discrimination and actually targeting it and getting rid of it. Well, now when we do have it, it's from a minority group, so they don't really do anything. And so when this happens, this CRO came in and he brought in another head to run some of these teams and departments. And I'll blurry this up a little bit so there's not, can't trace this back too much. But they brought in somebody else who was another department head. Again, same nationality, same connections and everything. The guy that was originally the head was not qualified. The second person they brought in, again, was not qualified, had minimal experience doing this. And they brought in a third person, again, from the same group, again, who was not qualified. Had zero years of experience doing this, because they worked for a hedge fund, which was not related to banking in any way, shape, or form. When we talked about the technical things, they had zero technicality. So on a risk perspective, you don't understand risk at a bank or an institution. You do not have the actual model training for this. And somehow you are going to step in and fix this team and do what with it? So this complaint of mine, I just kept my head down and didn't say anything. And surprising to me, there were some individuals of that same minority group who were now complaining to me and griping at work saying, it's not fair. They brought all these people in and it was basically discrimination. And so I'm looking at it like, I think it's discrimination. Seems pretty clear to me. Again, we're paying all these people a lot of money. The banks are padded. There's enough people in these teams underneath them that are already doing the job. We're just kind of putting in tokens in place. I don't know if it's for a diversity token requirement, if that's why they were brought in. I don't know if it's because they were just friends of friends, and so they brought friends in to do this. I don't know. It's hard to judge all these things because there's so many nuanced details behind these situations here. And so trying to figure out what's going on. And then when, people in that same minority group are complaining, saying, they know that was the reason it was, and they're all gossiping about it. You start to look at these firms and think, even if they were legitimate hires, which you can clearly see from their qualifications, they were not, you need to be aware of these sorts of issues and realize people are going to speculate here. And so you need to get in front of that, and you need to make sure that they come off as more qualified than they are if you're trying to hide these sorts of things. Or maybe they're really qualified and it just doesn't seem like it on paper. You need to make that clear so employees have faith and trust in these individuals. Now, this isn't happening at a bank. This is happening at multiple banks and multiple institutions. And so another example of this is they had another individual who was the head of validation who had 2 years of experience. That's right. 2 years. They had looked at models and risk for a whole whopping 2 years, did not have the education to do it, and they were the head of a validation team running it, telling people what to do, and just running it straight into the ground. They had massive turnover within the entire firm, both development and validation. They couldn't keep employees. They couldn't figure out the core basics of validation or development. They couldn't figure out how to set OPM. They couldn't figure out how to do risk tiering. They couldn't figure out how to actually build models because the models blew up constantly, and they couldn't figure out why. And yet I'm just so snarky with it because it's like, this is freaking common sense, people. Like, you don't have people that are qualified in big banks, small banks, all these banks. And when you actually go through, you can find there are banks, right? There are banks with qualified people. Don't get me wrong. But the vast majority of them, unfortunately, are not. And a lot of this even comes from a historical standpoint now, which is, Dimitri, we don't want to make an executive someone who has not been in the banking industry for 10 plus years. Well, financial risk management started really from Dodd-Frank back in 2010. Now, there are other regulations and things before that, and those people should be brought in, but we kind of wave our hands at that. And risk management and model validation teams, for example, specifically, really stemmed out of the Dodd-Frank Act in 2010. And so what happened in 2010 is that now they had to bring in, chief risk officers at banks who didn't have chief risk officers. You had to bring in validation teams and create them out of thin air. And so instead of finding people who are really qualified to do it, it more or less became I'm a friend of somebody else's. I mean, one guy I knew at another firm, so a third firm on top of this. Man, the stories can pile up. They were put in that position because they were retiring and they don't want to do it. And the CEO of that firm said, you know what, you want a really cushy job, why don't you just be our CRO? We weren't planning on having one. We'll make a position for you. We'll just bring you in. You can figure some things out, bring some people over, hire some new people. Again, no one has experience doing this. And so they just brought in a bunch of friends and family, basically, of all these things, and they put it all together here. So anyways, to wrap this podcast up a bit, because I can rant for a long time on these sorts of issues. The meritocracy of the banking institutions is really falling. I think it's really hurting the firms. The risk management practices as well are being just overladen now with just too much nonsense. So I was a big fan of a lot of the things they were doing with DFAST and CCAR. Originally making banks stress tests, for example, which you would think people would just common sensely say, hey, we've got this, credit card position, mortgage position. We have an entire bank here. Let's just stress test this and see where we're at capitalize. This was kind of forced in through DFAST and CCAR. This should just be common sense. We should all be doing this. So I'm a big fan of regulations on those sorts of tokens. But now we've gotten to the point too where they're putting on all these extra layers. People are growing teams just to grow teams now. I'm not going to say specifically which teams, but risk management as a whole, the regulatory side is massively bloated now. Again, as many of you know as well, I'm against a lot of the crypto and DeFi issues because they don't have enough regulation. So trying to get that balance of enough regulation to keep things functioning and keep people honest and fair without putting too much in here to make these things just massively lucrative payouts for people who are unqualified are things that need to be considered. And also on a banking side, even if you hired everyone qualified, a lot of the regulations are just nonsensical. And now we're just like trying to manage and micromanage nuanced details. Like, what if somebody had a policy and that policy didn't change, but nobody looked at the policy in the last year? We need to have someone just to look at this policy for the 15th time. It's like, we don't need to be wasting people and resources just for the sake of saying that we're managing risk and reviewing things that don't need to be reviewed. So anyways, the banks though, one of the reasons I left is a lot of this political nonsense of promotions, meritocracy issues. People aren't being promoted. People are being unfairly promoted in some cases. And then again, when you start to go up the ranks here and you start to become more senior, I don't want to be the person ethically put in these positions where it's like, I'm being told I have to hire people of this race, or I have to hire people of this nationality, or I have to do something very, very specific here. It's morally wrong. I don't know why we're doing it. I don't know why we're discriminating against people. It gets even dicier because you start to realize it's not just like one group against another group. It's literally this nonsensical network of people against other people. And it just goes against my beliefs. I think we should promote and hire people based on qualifications, which is how I do it. One way I do it, I'm not required to submit anything when I hire people typically. But I go through and I take all these notes on their resume. and I have a few resumes, so a resume for each person I've interviewed with all the notes and the justifications on why I hired them, because I don't want someone to come back and say, Dimitri hired this person because they were friends with him, or Dimitri hired this person because whatever. If somebody comes back and asks me, I can actually pull out the resumes and show you and be like, look, this is why I hired this individual. This is how they meet the qualifications. This is why they were better than the other candidates we interviewed. And this is why we made that decision. And I want it to be transparent and clear. If your firms have discrimination, right? Like some of these banks are really concerned with discrimination, but they're discriminating behind, closed doors. If you think you have it, then figure out who's discriminating and just nip it in the bud. Like, I don't know why we would do that. But again, a lot of these banks, a lot of these firms, as I somewhat touched on universities as well, they're now creating these groups and pockets to say, look, here's a minority group, whether it's women or some racial minority or, I don't know, some gender minority or some whatever. Just find a minority. They're trying to put these massive groups together in posters and like waving their hands and jumping up and down, talking about how they're helping all these minorities out. I would like to see universities and firms, banks, institutions, everything as a whole say, hey, we want to be, a solid business. We want to be profitable. We want to have a nice, awesome career path for people to work in. And we need really qualified people, and we want to hire the best of the best. And then we want to train them and invest in these employees and make good quality work environments, generate profits for our shareholders and investors here, and just do the right thing. Unfortunately, this does not seem to be what's happening in the banking industry. And in the last probably, 5+ years, it's really gone down the tanks here. I've heard it started before I started, like it was better before I started in the industry, and it kind of gotten bad. And then as it's progressed and rolled and gotten more and more momentum, and there's more government and more politics and more of this and more of that, it's just gotten out of control. So this is kind of my issue with the banks here. Again, we just need more qualified people. We need to promote people and hire people fairly. The fact that I have to say that, and I'm sure I'm going to get bashed from people and multiple angles and sides about, well, we're evening the playing field, and well, we need to do all this, and well, at the end of the day, like the whole goal should be to focus on hiring the best talent possible. And unfortunately, the banks have kind of deviated off that, which is one of the reasons I left. I was tired of playing the political games with a lot of these issues, and just tired of dealing with a lot of this nonsense and trying to protect other people that were, below me on different teams, trying to get the right people, the right promotions. I mean, we had one final note here. We had someone that was vastly underpaid, like wasn't even close. And I saw that when I came in, and I was like, we need to up their pay. They're like at 60% of what they should have been. So they need like a 40% raise to get them where they're at. Like, anyways, I had to fight it. Some other stories with this as well. I saw some other executives complaining. So one other story here. There was an individual who had been at this firm for, I think, like 5 years. They were saying they really wanted this promotion. There was a job opening, which would be a perfect fit for them. And they wanted that promotion. They were, applying for it. And if not, they're basically going to be leaving because they need to find something else where they can grow and have new opportunities. They had been at that firm, I think, for like 4 years and 10 months or 4 years and 9 months or something absolutely ridiculous. And HR was actually complaining, saying, oh, we can't do the promotion. We can't put them in that position. And then the person that was hiring was like, why not? I don't know what the issue is. They said, well, you listed 5 years as a minimum. So because you listed 5 years as a minimum, we can't hire them. And it's this type of nonsense that goes through HR and management and departments and CEOs and the whole financial institution, where it's like, we're so afraid of being sued, we don't do the right thing. Luckily in this situation, I think they steamrolled HR and are like, too bad. And I think what ended up happening was they said, fine, we won't technically promote them or put them in the new position now until 2 months. And then they will officially have the 5-year mark. But yeah, this nonsense is happening a lot. I wish to say it was at one bank. It is not. It is across the board. Again, if you look online, just start following these banks, you'll see they're actually posting these sort of programs and issues and things, because they view it as like a pat on the back. They're doing the right social justice warrior thing. So that's what's happening with that. So anyways, thanks for listening. Thanks for watching. And as always, until next time.